here we are, Professor Sweezy, Chapter 5, Take 5, in 5, 4.
Okay, let's look at an example here. You have it on your slides. So the company here using a job costing system and the predetermined overhead rate based on machine hours. So the allocation base is the machine hours. At the beginning of the year, the company estimated manufacturing overhead for the year would be 240. So that's our estimated manufacturing overhead. MOH stands for manufacturing overhead, which is 240,000. Okay, 240,000, and the expected number of machine hours, expected or estimated number of machine hours is 80,000 machine hours. Okay, so and then they give us some information about the jobs, the different jobs that the company is working on. We have 3 jobs, job 10, job 11, and job 12. And they give us the cost to date for these different jobs. So we have some questions here. The first question is compute the predetermined overhead application rate. Okay, we have all the tools to calculate it. Then question 1, the predetermined overhead rate, PHOR. Remember, we've seen this before. Predetermined overhead rate, okay, which is equal to the estimated manufacturing overhead for the upcoming period, 240,000. And we divide that by the number of the allocation base. In this case is the machine hours. That means we are allocating overhead costs or manufacturing overhead costs based on machine hours. The driver here is the driver of overhead costs are the machine hours. So divide by 80,000 and we'll get $30 per machine hours, which mean again, each time we use 1 machine hours, then we have to allocate $30 of overhead cost. Now, with this, the following question is to determine the total cost associated with each job. Okay, so let's do it. The total cost allocated with each job. So we have job 10, we have job 11, and we have job 12. Okay, so we have beginning balance for each of these jobs. We have 16,000, 26,000, 38,000 for job 10, 11, and 12 respectively. Okay, direct material cost, DM, abbreviating again, DM cost. DM stands for direct material cost. We have 4,000. Okay, and then I'm drawing these figures from your slides. You have them available on your slides. So that's 4,000, 4,800, 7,200 for job 10, 11, and 12 respectively. Direct labor cost, DL stands for direct labor cost. And then we have 2,400, we have 3,600, and then 4,000. Okay, I'm omitting these. Okay, good. And then we have the manufacturing overhead applied, MOH stands for manufacturing overhead. Applied or allocated are used interchangeably. They mean the same thing. Okay. So now, how much we're going to allocate to job 10 based on this rate of $30 per machine hours? So it depends on what? It depends on the number of machine hours used by that job. Okay. And they're telling us that job 10 used 400 machine hours. Then it has to be allocated this much accordingly, which is $12,000. Okay, We do the same, we proceed the same in similar ways. How much, like, you know, the allocation to job 11 would depend on how much, you know, machine hours used by job 11, and do the same for job 12. That give us here again 700 times 30, or maybe 30 times 700, 21,000 here, and then 900 times 30. Okay, let's keep it. Yeah, it's okay. 930, and we have 27,000. Okay, let's keep it like the same here. 400 times 30. Okay, 400 times 30. Okay, and then total cost. Then all manufacturing costs for the different jobs will be what? Will be, okay, so we're adding them up here, the beginning balance and the direct material cost, direct labor, and the manufacturing overhead applied. That will give us 34,400. Of course, everything in dollars here. 55,400 for job 11, and then 76,200 for job 12. Okay. Now, the following question they're asking us here: if job 10 and 12 were completed, prepare the journal entries to move these costs. Okay. So let's write here. So we have job 10 and 12. Okay. Let's erase this. Okay, so job 10, total cost for job 10 is 34,400, and job 12, okay, $76,200. And they're telling us that these jobs were completed. If they're completed, then what should happen to them? They should be transferred from the work in process account or inventory account to the finished good inventory account. Because by definition, the work in process consists of only those jobs that were not finished by the end of the period, right? So once they are finished, what is the total cost associated with these two finished jobs that were finished? Total cost. So we're adding them together, so we have 110,600. Okay. Now, what is the accounting entry to record the transfer from work in process to the finished good inventory? Then we debit finished good inventory, FG, finished good inventory, for 110,600 in dollars here, and we credit the work in process inventory, 110,600, right? Okay. That will take care of the third question, which is the journal entry to move the cost. Now, they say if job 10, the following question, if job 10 was delivered to customers that paid $50,000 cash, prepare the journal entry, and what is the gross profit for job 10? First, what is the accounting entries? Okay, so accounting entries to entry to record sales of the sale of job 10. Okay, so we have what? They said that we sold it for $50 cash, then cash to record the sales, here's $50,000. And then cash, and then we have what? Sales revenues. That's to record the sales, and then the second part is to record the reduction in inventory, okay? Which is what? Cost of goods sold. Cost of goods sold and finished good inventory. Remember, the $50,000 is the retail price, right? but it cost us less than the $50,000 to manufacture this finished good inventory that has been sold, or that job 10 that has been sold. It cost us only $34,400. So we have 34,400, 34,400, and we can guess what is our gross profit now. It's going to be the difference between the sales revenue, 50,000, and the cost of goods sold of 34,400. So our gross profit will be sales revenues minus the cost of goods sold, which is what? 50,000 minus 34,400, and that will give us a gross profit of 15,600. Okay. Now, they're telling, the next question is, they say assume that or what is the cost assigned to the ending work in process. So as we said earlier, the ending work in process consists of those jobs that were not finished by the end of the period. So, which basically, that's the cost of job 11, okay? So that's the ending work in process will be then basically the cost of job 11, which has not been finished yet. Let's make it clear here, nice and neat. Okay. Okay, so what is the ending balance for work in process inventory? Again, WIP stands for work in process, okay? It's basically the cost of job 11, which we have here, is $55,400. Okay? That's the only job left unfinished by the end of the period. Okay? Then they say, what is the cost assigned to the ending finished good? So ending finished good will be ending finished good, or ending balance of for finished good inventory will consist of what? Job 12, because remember that job 10 and 12 were completed, and we know that job 10 was sold. Then the only job that is left in the finished good inventory awaiting sale is job 12. And the cost for job 12 is, the cost for job 12 is 76,200, which is basically the cost of job 12. Yes, okay. Now, the last question is how much overhead was applied, or how much was overhead over or under applied, okay? So, let's do the last question here, tackle the last question is over or under applied overhead. MOH, manufacturing overhead. Let's see, okay? Let's see whether it's an over application or under application, okay? So we